Hello everybody, welcome back to another video. Today I'm going to break down a trade that I took earlier this week on Tuesday the 26th of March 2024. I haven't done one of these videos in quite a while. There's been a lot of changes and hopefully this is the last main change now that I'll need to make in terms of trading, and hopefully I can start uploading more content again. So starting with the daily time frame, you can see here I've denoted this as a bullish breaker structure and that price is in fact in a bullish phase. This zone here is how I view order blocks to be. Now I know there's a lot of different techniques out there. I first started with SMC and retail methods, and then I later added a little bit of an ICT entry style and sort of understood fair value gaps and things like that. And then I've sort of got a mix of the two. So yeah, this was the order block I see it as, because this was one of the pullback candles before then seeing a push to the upside. So at this point we had interacted here, and I was looking for price to possibly bounce from here. It's also in the discount zone too, so good time to look for buys. Okay, so now we've dropped to the 4-hour time frame. You can see here, if I just get rid of this handle, okay, we've got a premium discount tool here, and you can see price overall, similarly to the daily, is bullish. That's my swing buys, that's how I see it. And obviously since then it's sort of started retracing deeper and deeper until we hit this discount region. So internal is bearish because obviously you can see we're starting to form lower lows and lower highs as we make our way deeper and deeper into the discount region. And you can see here that the internal high here has just been mitigated at around 9 to 10 a.m. UTC time. So this obviously is an internal order block, which means that it is quite strong, but it won't be as strong as the lower 4-hour order block, which is our demand zone highlighted here, simply because my overall bias is bullish on both daily and 4-hour. So therefore that would be a stronger zone. So at this point now, I'm intrigued to looking for a short opportunity, so I'll drop to the hour time frame. Okay, so hourly is slightly different. For me, this here, this would be our hourly break of structure here, and the reason is because pretty much for the hour and lower time frames, what I do is any sort of pullback that's over 2 candles in size, and then we see a break again, I class that as a swing pullback. Okay, but here you can see we had 2 candles. Now if the second candle is just a doji, I don't count that, okay, because that just shows indecision and it's not for sure a swing pullback. And for any trader out there, if they see this as a pullback, they know that isn't really that strong of a lower high formed. So overall, from here to here, we place our fib, and we are in premium region, which is what we want to be in for sell opportunities. So here we can see within the hour 4 supply zone that I talked through earlier, we have an hour 1 order block that's just slightly below this 1-hour fair value gap. So we've got a load of confidence here to be going short, and the times I trade from is from 11 a.m. to 3:30 p.m. UTC. So I want to see on a lower time frame from 11 a.m. a fresh break of structure. Okay, and I'll explain a bit more of that now. So we've done the hourly, now we'll drop to the 15-minute time frame. Okay, these red and blue lines are an indicator I have on. These represent the previous daily high, which is the red line, and the previous daily low, which is the blue line. This just basically helps me stack another confluence that there's going to be liquidity resting above the previous daily high and below the previous daily low. So when I'm looking for sells, if we have a few zones here where we can sell from, and we've got this previous daily high in line with us, then that is plenty of confluence to look for an opportunity to go short. And similarly to the hourly time frame, you can see here we had a push up and then over 2 pips of the same in pullback, and then we can see that this is a 15-minute bullish break of structure. Now obviously everyone has different views and ideas, but this is just what works for me. Okay, so from this point now, I sort of monitor the 5-minute time frame and the 2-minute time frame. I like to execute on the 2-minute time frame where possible, but if it isn't possible, then I will try and forge it through the 5-minute time frame. At the moment, it's 10 o'clock, so I will play it forward slightly till we hit 11 o'clock. Okay, so now we're on 11 o'clock, and you can see price pushed a bit deeper in and now looking to push the downside, so I'll drop to the 2-minute time frame. Okay, same zones applicable, everything like that. And similarly to the 15-minute time frame, a 2 candle or more pullback is a swing pullback for me. So this would be a 2-minute break of structure to the upside. Okay, and now I want to see price break below here, so something like this, break below, then we see a retracement into a sort of premium region where we have a fair value gap that we can enter from, and then to continue to the downside like so. So if we play price forward, we can see that we get a 2-minute bearish break of structure. Okay, that's where we get it at. So at 12 o'clock, we get that 2-minute break of structure. So now I mark up a premium discount tool, and I want to see a fair value gap in and around the 0.5 region or above. Now with how price is pushed, the only one I can see really relevant here, there's nothing in this leg other than this fair value gap here between this wick and this wick, but we are nowhere near the 0.5 region. So the only other area we have for opportunity of entry is all the way up here. Now it has been mitigated before, but this is something that I'm not concerned about anymore. It used to be something when I was doing purely SMC that I wanted no mitigations, but to be honest, after a few months of developing my strategy and understanding a bit of the ICT concept as well, you know, this is not necessary. Realistically, I would be entering off this bullish candle here if I was trading purely SMC only. So I'm happy to look for a sell from this blue zone. Okay, so if I place a theoretical sell limit, so here, just on the open of this zone, and the previous swing high is 5.9 pips away from entry, and then I like to add a pip on theoretically for our stop loss in case of any liquidity sweeps. And then obviously if you have an account, a forex account that has say a spread of 1 pip, then I do add that on, but I will not add it to the trading view. Okay, and my personal account has 0 spread as well, so I like to just have this pip above just in case, but with a 0 spread account, I don't need to worry about any further retracement. And then the target is 2R, it always is, that just is how it works best for this strategy. You know, I've tried 1 to 5s, 1 to 3s, and since doing this 1 to 2s are good because we can get in and out quick, and you know that gives us regular opportunities in the markets on a weekly basis. So yeah, if we play price forward, let's see when we got tagged in. Okay, so now we have broke structure to the downside again. We never got the tag up here in the end. Okay, so what happened was when we got this break of structure, we saw that 2 pip minimum pullback, 2 candle minimum pullback here, and then we broke structure to the downside again. So now everything changes. Okay, and we follow price like this up until the point of seeing 3 breaker structures. If I see 3 breaker structures, I'm not interested in trading this anymore. But as you can see, there's clearly quite a lot of momentum in the market, so we're okay to chase for a while to try and get in to the markets. Okay, so the new high is the wick high of this bullish candle here. So we set our premium discount from the high to the wick low, and any fair value gap around the 0.5 region or higher we enter from. Now the fair value gap I ended up choosing was this one here, and the reason for it is because I think I sent out to my community this trade idea before this final wick had been formed. So I think I sent it when this bullish candle had printed, because that said to me that we might be starting our retracement phase. So at the time, the premium discount tool wasn't to that wick low. It was actually to the low of this bearish candle here, which meant that this was still quite a significant area. And, you know, with having 2 candles printed here in a row with no wicks either side to help create the fair value gap, I just thought this was the more high probability one. So entry on the open of that. The stop loss now goes above the previous swing high, which is this wick high here, which gives us a total of 8 pips in stop loss size, and then just adapt this to our profit. Okay, and this was then sent out to the free community I have at the moment. If you are wishing to understand more about Forex, or perhaps want to take part in the markets, you don't have time to learn, but you still want to try and earn something on the side. You know, I do send out trade ideas with exact points of entry, stop loss, and take profit that I take. Obviously, the risk is with yourself. I'm not a financial advisor or anything like that. You know, it gives you a chance to get involved if you're comfortable to do so, or to simply mark it out yourself on your charts and see how it would have worked out. And if it does work out, then, you know, you can start seeing my daily analysis and learning from it yourself. So anyway, we'll play price forward. As you can see, we got tagged in there. Okay, so we got tagged in at this point at 20 to 1. Then we play price forward still. And then at about 10 past 2, just after, nearer 2:15, we end up hitting our take profit of 2R. So you can see here, we got tagged in at 12:42 and came out at about 2:13. So, you know, not a long trade at all. It's very good for intraday trades, in and out. And if we continue to play price forward, we actually do end up going down to over 3R. But sometimes that happens, sometimes it doesn't. I'd rather secure 2R as opposed to risking trying to get that extra percent and potentially losing all the position profit. That pretty much sums up this video. It was just a quick trade recap to show you guys how I trade now at the moment, and I'm hoping to sort of develop this further, create my own sort of course for this, and increase the Telegram community in terms of size. As I've said before, it is free to join at the moment. The link will be in the description, and I hope you found some value from this video, and hopefully catch you again soon. Thanks for watching.